Hey guys, what's up? Alec back with the daily stock market, and today I want to talk about some swing trades that are not doing too well right now. We have some stocks like Lemonade is one I really want to talk about, down 19% in the past week. All right, so this is a bloodbath going on with Lemonade, down 32% in the past 3 months. So the question is, on these stocks that we're going to talk about, probably three different stocks. The question is, should we dump or should we hold or should we buy more and average our costs down? So let's answer some of those questions. Now, Lemonade, first up, we have a support that was pretty strong at 86. And as you can see, it's making lower lows very consistently. All right, that's three lower lows right there, which is a bad sign that's going to be going lower. And then we saw it even go as low as $60 per share in the past and pop back up. So this one is a good swing trade, in my opinion. All right, under $50 per share seems a little bit risky because they're pretty much at an all-time low. The lowest that support we have on them right now is $47 per share. So keep in mind, $47 per share is a very important resistance for Lemonade to not go below. If it does go below $47 per share, then obviously it's going to be making itself a new resistance at some point, but we don't know how low that resistance would be. So keep in mind, it could go down to that $47 support down there. And if it does go below the $47 support, then it would obviously be making a new support. All right, so let's kind of go a little bit more of a deep dive into Lemonade. So summary on Lemonade. Lemonade has launched its car insurance product and it has announced that the acquisition of Metromile to help move its car insurance forward. All right, so this can be very important, very bullish for them. All right, this is recent news, by the way. Investors showed a displeasure in the all-stock Metromile deal because the company has poor fundamentals and wasn't considered a success. So keep in mind, that's why we see some bearish momentum right now. The strategic reason for the Metromile acquisition included gaining billions of miles drive data, which is important, advancing automatic technologies, and deep pricing and underwriting knowledge. So be careful. This is obviously more of a long-term stock. They have a very long-term mindset. So if you don't have a long-term mindset, then Lemonade probably isn't the best stock for you. With the addition of car insurance, Lemonade now has a complete line of insurance products that can be bundled to consumers, thereby increasing customers' lifetime value. Lemonade is a buy for aggressive growth investors willing to speculate on a high upside opportunity. So that last bullet point there pretty much summed it up perfectly. It is a very aggressive buy for aggressive growth investors willing to speculate on a high upside opportunity. So with that being said, you definitely want to have a longer term mindset. This one, however, I think can be swing traded in the next 3 to 6 months back to $75. Lemonade tends to move faster than expected as well. When it goes down, it does pop back up, and we can see this one at $75 maybe in the next 1 to 3 months. But in my personal opinion, it'll probably take around 3 to 6 months to hit $75 per share again. And this one can definitely go to new all-time highs, especially if they start nailing it on the car insurance and extending the lifetime value of the customer. So if you want to see what the analysts are saying about Lemonade, by the way, they're saying about a 54% upside, which is $75 per share in the next 12 months. I'm saying a little bit sooner. I'm saying the next 3 to 6 months personally. The analysts are saying in the next 12 months. They're being a little bit conservative here. And as you can see, we have some people from the Oppenheimer Group, JP Chase Morgan, that say $95 and $85 per share. And that was only reiterated 14 days ago in the next 12 months. We have another 4.5-star analyst that has only a success rate of 64, but it has a buy at $98 per share. Just reiterated that a month ago as well. Okay, so the next one on the list that we have to talk about is Wix. All right, so Wix is $157 per share, so it's getting to affordable price range. It's only 18% down in the week, and I say only like it's only 18%, but that's a huge percentage point to move down in just 1 week. Now, in the last 3 months, they're down 26%. So this is another stock that's been getting destroyed consistently from all-time highs, down 54%. All right, keep in mind, Wix is a great platform, a great company. I'm sure if you're watching this video, you might have even tried to build a Wix website at one point yourself or have had experience building a Wix website. So personally, I like to invest into companies that I use every day or household names or very popular companies. All right, with that being said, back in 2019, before the pandemic hit and more people were working from home, building their own websites, that's why you see a very positive growth spurt in Wix right into in 2020, mid 2020, when the pandemic was dominant, because a lot of people were working from home and trying to build their own websites. All right. So with that being said, we see it shoot up to $353 per share, which was an increase of around 150% from beginning of 2020. Now, the great thing is it pretty much erased all those gains from the pandemic, and we're basically buying Wix at the current price it's at right now. You're basically buying Wix at the price it was in 2019, which is super attractive to me personally, and for long-term investors should be as well. It's at a very attractive price point, and I think right around $150 per share, the risk versus reward, the reward is going to be a lot higher than the risk at this price level. Very quick, we're going to go over Wix. Market conditions are very favorable. Although the e-commerce market has grown rapidly, the penetration rate is still quite low. Wix announced a mobile app builder that allows users to create and customize their own apps, which is huge. All right, well, so once that gets out to the public and more predominant, that's going to be very big, because a lot of people always want to customize their own apps. And now that Wix has announced a mobile app builder that allows users to create and customize their own apps, that's going to be a huge thing. All right, and the analysts have around a 50% upside in the next 12 months. I would say there is personally that there's more than that. I think they can possibly get back to $250 to $300 per share in the next 12 months. However, I think that $200 to $225 is possible in the next 3 to 6 months on a swing trade. However, I think there's more power in a longer term swing trade, looking at between 6 and 12 months or more than 12 months with Wix, and they have some great upside potential, and the analysts have about a 50% upside on average for Wix over the next 12 months. Okay, we have some top 25 analysts coming in on Wix, and they reiterated this 12 days ago, both the top 25 analysts. All right, and they said 250, you can expect 250 Wix in the next 12 months. All right, these guys are very successful, 72% success rate with 46% average return. And I'm pretty much on these guys' level as well. I probably have about an 80% success rate, especially when you're looking at a 12 months performance, which I think, yeah, it says each rating is measured on a 1 year period. Mine's probably actually a little bit higher than 80%. I don't want to brag or anything like that. My average return is a little bit higher as well, closer to 50%, as I showed you guys before. So overall, I definitely think that Wix will be $250 per share in the next 6 to 8 months. And it will probably even be a 200 to around 250 in the next 3 to 6 months. And keep in mind, I'm not a financial advisor. These are just all my own personal opinions. So the next one we got to talk about is Snap. All right, down 6% in the past week, 9% in the past month, 33% in the past 3 months, and it fell off a cliff in mid-October. All right, you guys probably remember that, and it still seems like it's still going down. So it's basically at a 52-week low. So I like buying big companies like Snapchat, Nintendo at 52-week lows. Nintendo's another good one that I probably should have added to this video, but we'll probably talk about it in a later video going on as well. So Snapchat, let's talk about them. In my opinion, they're going to be definitely around $70 per share in the next 3 to 6 months. And keep in mind, Snapchat's market cap is only 80 billion, so it's still a fairly small company compared to some of these other big giant tech stocks. Yikes, after the knockout second quarter, Snap's third quarter was rough to say the least. Competition from TikTok and Marco supply chain issues are weighing on and could continue to weigh on revenue growth going forward. The risk profile, even after the correction, is relatively elevated. That said, value can be found here. Snap continues to be an advertising powerhouse with a large TAM. That said, valuation may be stretched even after correction. Some of those headwinds, including TikTok competition, are a little bit more natural. Snap had a brutal earnings report, missing the top line and lowering Q4 guidance. The market responded in kind, knocking the stock down by over 27% at one point. But the risk versus reward profile has not seen a better balance in quite a few quarters. With perfection no longer priced into the stock, a 2-year time horizon at $50 looks like a first in a while opportunity to go long on Snapchat. So if you're a long-term investor, there is a lot of value in Snapchat at $50 per share. Currently, we can easily be selling this around $70 per share, in my opinion. Definitely won't be taking 2 years either. Shares of Snapchat created after the social media company issued a weak revenue forecast for the next quarter. The steep decline in Snapchat's market value creates a buy the drop situation because the market is overreacting to Snap's commercial challenges. And why Snap is a buy? Snap reported a record 306 daily active users, all right, which is about 10% of what Facebook has. And they're about 10% of the market value of Facebook too, keep in mind. Showing 23% year over year growth, which is fantastic to see those double-digit growth. And the earnings card showed record users in all territories. So remember, Snapchat, you're also, diversifying yourself because they're also not just in America, they're in other territories as well. So in Q3, we saw 96 million of Snap's 306 daily active users were from the US and Canada, which calculates to a geographic user share of only 31% in North America. The numbers of users outside of North America surged to new records, 210 million. So look at that. Majority of Snapchat users are actually outside of North America. In the third quarter, 80 million, which came from Europe, and 130 million came from other regions. So it's huge in Europe. These regions added 10 million new daily active users to Snapchat's platform over the quarter. 306 million daily active users, and you can kind of see some of the numbers here: North America, Europe, and the rest of the world, and kind of can see the growth quarter over quarter, which we see the growth trending up since 2019 pretty sharply. You can kind of see that little trend up right there. Now, what do the analysts have to say about Snapchat? So we see the analysts on average have a $75 price target in the next 12 months. Remember, in my personal opinion, I think that will take around 6 months to hit $75 per share. So it seems like I'm typically twice as bullish as some of these analysts are on these stocks that we're talking about. We see Eric Sheridan with an $80 price target. We see other 5-star analysts. We even see a top 25 analyst coming in at $74 price targets. We see other 5-star analysts that are coming in at $100 price targets over the next 12 months, which I'm more on page with Stephen Jew here, or Stephen Jew, and I'm looking at about $100 price target in the next 12 months personally. If we look at the smart score, we can see that an insider actually sold $16 million in the last 3 months, but we see that hedge funds have actually increased their activity, buying 300,000 shares in the last quarter. So I hope you guys did really appreciate that video. Check out the daily cryptocurrency if you need a crypto update today. I just put out a new video, and make sure you're subscribed to the daily stock market as well with story notifications on, So that way you're in the loop with all the stocks that I'm posting as well. I have a close friends list where I post all my buys, what I'm selling. And the close friends list for cryptocurrency, we're absolutely raking in the dough right now, up around 300 to 400% on 4 or 5 different coins now. And they're continuing to go higher and higher, up around 30% on the day. So here you're going to see I made around $5,000 in cryptocurrency. And if you're only in stocks, a good thing about cryptocurrency is it kind of balances out. So if you have a bad day in the stock market and have a good day in cryptocurrency, for example, it can really balance out your portfolio that way. So smash a thumbs up, share with a friend. If you want to get on my close friends list, remember that's where I post all my buys, sells, how much I'm buying, how often I'm buying. So guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.